Hey everyone, today we're going to talk about student loans and just essentially the different types of student loans, whether you even need student loans, and just how they work in general. So let's get straight into it. For those of you who may not know me, I'm Priya. I graduated from U Chicago in 2019 with a degree in astrophysics, and I'm just here on YouTube to help you get through your college journey and tell you things about life. So I actually do have a video on financial aid. Strongly recommend you watch that if you haven't already, because financial aid is the reason I never had to take out student loans. I had 70% of my tuition covered, which was almost $220,000 just covered by financial aid. But let's get into all of your different options for student loans now. There's essentially two main categories. There's federal loans and private loans. Your eligibility for federal loans and all of that will be determined through FAFSA, so everyone does have to submit your FAFSA documents even if you don't think you're eligible for aid. You might be eligible for aid outside of federal aid, like institutional aid from private institutions, which honestly is much better than federal aid anyways. So they actually look at your FAFSA to determine whether you're gonna get any money or any subsidization in your tuition. So everyone has to submit FAFSA, and that is what's used for your federal loans. On the other hand, with private loans, that's actually something you'd have to do research on yourself to see what the best rates are. When I say rates, it's because you have to apply to several different lenders. Some of them are Ascent, Sallie Mae, College Ave. Those are private college student lenders that give you money at different interest rates based on credit history. So that's important. For FAFSA, you don't need to have proof of credit history, and you get all of your loans either in your name or your parents' name. And we'll go into the different types of federal loans. But for private loans, the biggest difference I'd say is just the fact that you need to have credit. So one of your parents or someone close to you would have to co-sign. And if they had good credit, you're gonna get a lower rate. What a rate is your interest rate that you're gonna pay back on your loan, which could be anything between 2% to up to 8%. So for example, if you take out $10,000 in student loans and your interest rate is 8%, you're gonna have to pay 8% of $10,000 every year just for taking out the loan until you repay the full amount. So if it takes you 4 years to repay it, that's a lot of money that's just kind of going away as you pay the loan off. Like your first year, you would have to pay $800 just in interest for even taking the loan out. If your parents have good credit history or whoever you're signing with has good credit history, your rate is actually gonna be much lower, sometimes even lower than the federal rate, which could be a massive benefit to you. So you really need to look into what is the best loan for you depending on that credit history factor. And there's a couple more things that we'll get into as well. The three different types of federal loans are direct subsidized loans, direct unsubsidized loans, and direct plus loans. So the direct subsidized loans is when for the duration of college, your interest rate is actually paid by the government. And this is usually for families making under about $50,000 a year. And the reason they do this is because you've demonstrated financial aid need. So in your FAFSA, they're gonna see what your family is making, net worth, things like that. And they would have determined that you need the financial aid to attend college, and they would pay the interest for your loans, whatever your interest rate is, for you the duration of those 4 years, and then you pick up paying the interest rate and the loans after. For federal loans, the interest rate is actually set by Congress every year. The loan interest rate is always fixed. So whatever Congress sets it to, that's what you're gonna have to pay every year. Even if there's like a massive depression or something, you would still have to pay that rate and not something way, way higher. So that is a benefit, but it depends on if you're taking out the loan on your own name or your parents' name. And that goes into the direct plus category. So essentially direct subsidized is when part of the loan interest is paid by the government during the duration of college. Just a quick interjection to let you know that you should smash that like button, not for student loans, because we don't want you to take out loans. but you know, for the information. Thank you so much. Direct unsubsidized is actually when they don't pay your rate. So you're gonna have to pay the interest rate on your loan from the beginning of getting that loan. The reason there are distinctions in that is because if you get a direct unsubsidized loan, it means that by federal government standards, you haven't demonstrated enough financial need, which is very arbitrary because a family could easily be making, you know, $200,000 and still really need aid, depending on so many different situations, the amount of debt they have, etc. So personally, I don't think the federal government is going to give you as much aid as you think you're going to get from them. For example, the Pell Grant, which is the only grant that the federal government offers, the maximum you could get for a Pell Grant is $6,495. That doesn't even make a dent in most tuition. That's why I'm very pro financial aid, because I had like $50,000 in grants for each year that I never had to pay back. So if you can avoid taking student loans, you know, obviously you would do that, which is something I'll talk about a bit at the end of the video, as well as something I talk about for like, you know, 13 minutes of good content in the financial aid video that I'd really recommend watching. Moving on to the third type of federal loan, that's called the Direct Plus loan, which is for graduate students and parents. So if your parents are going to pay for your college tuition, they would take out the loan on their name. Just note that the interest rate for them to take it out on their name is actually much higher than if you took it out yourself. So it's about 2 to 3% higher on average. And something that you need to know about federal loans, which is probably the biggest con, is that you're gonna have to pay something called an origination fee. So it's an extra fee that you're paying above your interest rate to borrow from the lender. The origination fee for students is about 1%, and then for parents, it's whopping 4%. These fees are actually taken out of your loan amount even before you get all of it, and that's kind of essentially what you're repaying back. So private loans do not have that origination fee, but there are benefits of having federal loans because there's a lot more lenience in paying them back. For example, if you end up working in the public sector for a certain amount of years after college, for example, if you're a teacher, you can actually have all of your loans forgiven. But again, you're having a government salary for that amount of time until you get your loans forgiven. So there's a lot to think about in there. But yeah, origination fee is probably the biggest con when it comes to taking federal aid over private aid. Federal aid also has a lot of borrowing limits, so you can't take more than about $57,000 a year, and I think $138,000 if it's a graduate student or a parent. Which honestly, $57,000 is a lot of money, right, for one student, but actually the average tuition at UChicago was $82,000 per year. So there are some schools where you wouldn't even be able to cover all of it if you needed, you know, 100% financial aid, which honestly, like all of those private institutions like Ivy Leagues, private research universities, they're gonna give you aid. Like if you really have no money to pay for it, your parents are making, you know, less than $200,000, you're gonna get a lot of aid. I promise you, if it's a private university, you will get the aid. So you wouldn't need to take out, you know, $80,000 a year in student loans anyways. But still, just something to remember, there are caps for federal loans. But even given all of the origination fees, that actually might be better for you than private loans. So for private loans, you can have a fixed rate that you're just gonna have to pay until the loan is repaid. Like, you know, maybe they say your fixed rate is 3%. So you pay 3% of the balance of whatever you owe them every year until you repay all of it. Or it could be a variable interest rate where it changes from anything between like, you know, 2 to 10% every year. Probably not 10%, that's a bit high, but it could be variable as well. And interest rates are generally actually higher. It really depends on your credit, but it could be much higher for a private loan given, you know, maybe the cosigner doesn't have the best credit history. A federal loan rate, even given the origination fee and stuff, is going to be lower. So you really need to look into your personal situation. Like I can't tell you that a student loan is going to be better from the federal side versus the private side because it really depends on your situation and what you're using the money for, how much money it is, what your interest rates are. So going into who actually needs student loans, For those making under $50,000 a year, you probably will get a Pell Grant from the government. And if you're applying to any private research university, you're probably going to get a lot of aid. I'm telling you, I personally did not qualify for any sort of federal subsidization. I didn't get the Pell Grant. I didn't get any subsidized loans or anything, but I still got almost $50,000 for free from the University of Chicago because they used their tax calculator and determined that I needed financial aid. A lot of universities have really, really good policies on that. State universities, like public universities, usually do not have those options. So going to a private university, even though the tuition is higher, actually is cheaper for you than going to a state school because private universities have such great aid packages given their larger endowment to student ratio. I'm actually going to make a video on that, so stay tuned for that. So hopefully student loans aren't something you need to take out. You just have to weigh the pros and cons accordingly. For example, if you take out the loan in your own name, the rate is going to be lower than if your parent takes it out, versus maybe you guys have great credit. So then a private loan might be the better option for you. Really, like, think all of this through and apply to universities that are historically good with giving financial aid options that you do not have to repay back. Think about all of that, but that's essentially all I have for you on student loans. If you want me to go into detail on any of the topics I mentioned in this video, please let me know down in the comments, but I really hope this video helps you understand how student loans work, the different types, and the differences between all of those student loans. Thank you so much for watching, and I will see you guys at the next video.